Good evening, all. Ira Epstein of Linn & Associates with your evening flash update for metals. And this is for Monday, December 13th, 2021. We're just after 5:30 p.m. Central Time. Now, I did make a lot of changes on the boards behind me. We're away from the December stock indices. We're away from December currencies. We've moved into the April platinum as an example. In the energy markets, you've got to move to more of the FEBs. Grains, you got to be into the March. So everything's expiring for the December contracts, and you want to be certain that you've moved on. In the gold, we're down a little bit tonight, but the market keeps challenging that 1792 level. Now, this is a rough week. 20 central banks, as of today, began the process of telling us what their monetary policies are going to be for the week. That's one heck of a lot. Now, not all are major banks, I'm sure you realize that, but you've got the big boys coming at you now. You've got the European Central Bank, the Bank of England, our Fed. Everything's coming about. What are they going to do? People think that our Fed is going to double the amount of the tapering, going from 15 to 30 billion. Could be surprise bigger. Might be a surprise a little bit smaller, but I think that what we're going to see is the increasing of the tapering, but I'm not convinced you're going to get the Fed as aggressive talking as you might think, but the dot plots might be very aggressive. I just said an awful lot, and that's how it's going to play out. You could have different unknown members that put their dot plot moving everything forward. They can easily do that. You can have the Fed chair saying, no, I still want to see how inflation is. We're seeing report after report that inflation is not transitory, be it rents, wages, you're just getting tuitions. Everything's going up and they don't expect these to drop back anytime soon. So when that all happens, how do you play it? Well, we go to the gold market, which in times of inflation acts better than this if inflation's as real as the people would have us believe. Do not write me and say, Ira, how do you not believe inflation is as real? That's not what I'm saying. I'm the reporter here, telling you what others think. I'm with you. I admit I thought inflation would be transitory at the beginning, and I admit it got sticky. I said that here, and I am now of the opinion that a lot of inflation is real sticky, but there is an element that won't be. You don't have to agree with me on that, but it can be container costs. It could be gasoline prices. We'll go on, and I'm going to talk about what OPEC did today and what they said in our financial report. Suffice to say, on a weekly chart of closes, I use this to get an idea of momentum. When the market is underneath the 18-week average of closes, which it is in this, the momentum is down. When the market's over it, the momentum is up. It's that simplistic, but it's a filter on other things. Do you disagree that we have just gone sideways as can be? Now, is this going to be an inverted head and shoulder formation? A word that I haven't mentioned in a long time. A shoulder, a head, a shoulder. So from the shoulders, just giving you a round part, let's say that number is 1775, just as an example, and the high here is 1875. You would grab the top part of the hair on this head, pull it, and flip it over. And that would give you an objective, if it turns out to be an inverted head and shoulder formation, of 1675 on the downside. You'll hear talk about that if you start breaking out to the downside. I'm not the only person that's mentioning this, but I am the only one I've heard say it so far. Nobody, and I read newsletters galore, has mentioned that, but that's the clear pattern. It's there if the market wants to break out through these lows and let go to the downside. Then you're there. To negate it, you have to start getting over these successively lower highs. And you see those, what you had here. So you have a pattern of a higher high and lower low. You're just fighting a battle with the swing line. When you don't have a swing line on it, you can see how traders would be looking at these numbers right through there, even going to that high. That's one of the ways they'd look at it. The swing line, I think, does it more efficiently. So the current pattern is no pattern. It's a lower low, higher high. That is not a trend. The second thing, as the market came down last week, I was here saying if it rallies, the first major resistance should be the 200-day average, the 100. And if you Clear that, then the 18. This is what the market started doing, and this is where you're at. I don't think I was wrong at all on my analysis. So now I'm giving you something new to munch on. I know I hate to do that, but that inverted head and shoulder, if the market breaks down, that's not a given by any stretch. In terms of the Bollinger Bands, they now have begun their process because of all that sideways action of wrapping their arms like that around the market. So the resistance on the top part is going to drop down quickly, and the support's going to come up quickly until the market decides what it wants to do with that. Momentum has turned up. The objective when you lost the embedded reading right over here, over 20, the next day over, means you're probably going to the closest main moving average. It did it when it got to the 100, and now it's fighting the battle right there. It's the closest main moving average. That's one of my rules. So very important to look at that. Then the gold-silver ratio. Well, silver is finally backing off a little, but you do realize it cleared this 80 level. So it only just did this. If we take a look, this was the market on Wednesday. This was Thursday. Got over everything, and now it's backing off to challenge that 80 level again. That's very typical of the market, but it's not a sign of strength in silver. In the silver, you still have the embedded reading, but what could be a sign of strength is if you lose the embedded reading with the close, what? Over 21. That would do the job, and then I think silver would make its run because it's the closest moving average, the red line, not the 100 or these. That would be the target. Also, if you think about it, going into the FOMC meeting, I told people you don't want to carry much of a position. I had traders that in my update, and I don't mind telling you, they were short here, and we had them come out of that market there, and some are still carrying part of their short position in mini contracts. But would I have them hang around? No. Do they have a lead on the market going home at this? Yeah, a nice one. So they're still looking okay. Copper market, sideways action. Just sideways as can be right here, not giving a clue one way or the other what the next leg of this wants to be. In the platinum, and this is the April contract, lower highs, lower lows, fully embedded, still bearish. Could be headed back to the 882.80 level to get this market to turn around. The red line, in my opinion, at least has to close over 21, and then I'd look for a challenge of the 18-day average of close. But more important, that might be the point at which momentum in the metal market starts coming alive. In the palladium market, it's like platinum but not embedded. You've broken down rather hard. You never even made it, and I was pretty amazed when this happened, that when you lost the embedded reading right here, with a reading over 21, you had the numbers. If we take a look, both numbers on this day were under 20, under 20, under 20, under 20. And when you got that close over it, right over here, normally you make a run to the 18-day average. If you get under these lows again, you've got a real problem if it doesn't do it. And guess what? It's not doing it, and you're getting a real problem. You could be going back to that lower Bollinger Band, and this would be a trap for those particular type of traders. In the dollar index, do you really want to be in it going into the FOMC meeting, the European Central Bank meeting, the Bank of England? I can go on and on. It's dangerous to do it right now because there's going to be so many cross currents to what is said. I think the market gives it a fait accompli that tapering is going to pick up. It's about what else is said. It's about the dot plots that we're going to see again now. It's about what the Fed says in wording about Omicron, how fast they're going. While they're getting rid of the word transition, is some new word going to replace that? There's an awful lot to deal with on it. And to help you get along with that, I put out not only my market letter, but we have a complete futures research kit. This is going to include for you not only the research from Linn and me, you can get that as well, free trials to everything, our charting software, listen to the audio commentaries that come out during the day, and if you're not around, you just go to the media section and they'll play right for you. And they're broken down by soft commodities, metals, stock indices, different trading strategies on options, futures markets, spreads. You get to work with all that. I'm really specific with what I write and put out for my clientele. So we want you to also see the morning flash updates that I put out, see what my subscribers pay for before you pay a penny. If you haven't seen this, my paid people, they know what it is. And I'm going to be doing a new course now. I'm doing that outside day course. I'm going to go to Hard to Work on it tomorrow. So I'm freeing up time to just go back to that. They go out very quickly once I do it. I got to lay it out first. Then the recording just happens 1, 2, 3. To get all this, just go to our website, go up to the word free offers on the top of our page. Take advantage of it there. I'm Ira Epstein. You have a good trading day. I'll talk to you all tomorrow.